Alright, ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over a couple things I think you need to know. Obviously, what's coming next for AMC stock, what I think is coming next, what you need to be watching for. But on top of that, and let me just tell you right now, it's very bullish, potentially seeing much higher prices from here, $20, $30, $40, $50. That's kind of what I expect. Call it in between $20 and $50 is what I expect with this latest rally. Now, there's a couple things that are going on that are also affecting the markets. This Israel war, that is affecting the markets. Bond yields, that is affecting the markets. Fed speakers, that is affecting the markets as well, just the Fed in general. So we do have some updates to bring you guys. The data coming out tomorrow morning could actually be very important for our markets as well. So I want to get you guys prepared for what to expect tomorrow. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Now, what we have seen recently with AMC stock is the markets have done relatively good, and AMC stock has done much better. So if we continue to follow this trend, you would want to see the markets do okay or do good. That should continue to allow AMC stock to rise from here. And about time we get an oversold bounce. Let's just call that out. That's the obvious here. It's been a long time since we have seen an oversold bounce. And that's actually what you're seeing. I don't think this is shorts covering yet. I don't think this is, a lot of that. I think it is the option activity. It is retail investors. It is some hedging by the hedge funds and institutions, but it's not shorts covering as of right now. It could develop into that. That's possible. We'll talk about that a little bit later on into this video. But the couple of different things that are really the most important things right now for the markets. Obviously, this Israel war situation. Now, it says IDF says Israel soldiers killed 3 terrorists during gun battle in Ashkelon. This just came out 50 minutes ago. I do have a live feed pulled up over here on this other computer. It is nighttime over there, so not too much lately has happened overnight. Usually a lot of the action starts during the early morning hours, like once it starts to get light. So that's going to be later on today. We might get an update. It looks like Israel might start to make their way into the Gaza Strip. Again, like I said in the last video, Hamas is going to be fully eradicated. It might take some time, but Hamas is going to be fully eradicated, okay? So that's important to remember. Now, if this situation stays the same, meaning that Israel fights Hamas, Israel goes in there, they destroy Hamas, that's fine for the markets. The markets will do okay on that. If Hezbollah gets involved and that forces us to get involved, or if Iran gets involved and that forces us to get involved, then you risk a much larger conflict. That's what the markets would not like. And I would expect AMC stock could, follow the markets at that point, whatever the markets do. But I would expect the markets could fall 10 to 20% if we get involved in a conflict over here at all. Because what that's going to do is just not only the conflict itself, but also oil, right? Iran has like 30% of the oil that flows through the Iranian Strait. So if we get into a conflict with Iran and Iran wants to slow down the flow of oil, well, that could be a big problem. And this kind of adds to the already bad situation that the economy is already in. It's not like the economy is doing well at the time that this is breaking out. So this could be a negative thing. We'll have to wait and see how the situation develops. But like we've seen over the past couple of days or so, we haven't even had a red day since this Israel war started. So the markets have taken this pretty good. I think they're pretty conditioned since the Ukraine war has been going on for a long time. That in 2022 was another reason why stocks did fall, along with the Fed raising rates, fears of a recession, declining GDP, things of that nature. But I think the markets are a little bit more conditioned to this until, like I said, if we get into this conflict or not. So that's something to be watching for. The second thing that is important to point out is yesterday bonds were actually not trading, but bond futures were trading. Now, the price of oil went up about 4% yesterday. That was very inflationary. But what you've seen with TLT is TLT actually went higher. TLT in theory should have went lower yesterday, meaning that investors went out and they were fearful and they bought US Treasuries. That's a fear move. Not exactly the greatest sign. Okay? So depending on what data we get, depending on if we get involved in this situation or not, I think it's going to have a big effect on bond yields. And if you do get a rush to safety, if we do go into this conflict and there is fear out there, you might see what you've seen today. Bond yields coming down big time as investors want to buy the bonds. Now, today, I should say, TLT itself was actually kind of flat, slightly down, so you did not see that fear move today. That's great. It's a sign that the markets are getting over this Israel conflict already. So again, as long as that situation does not escalate, you will be just fine. Now, if you take a look at what bond yields did today, the 30-year Treasury was down about 11 basis points today. The 20-year Treasury was down about 10 basis points today, and the 10-year Treasury was down almost 13 basis points, 12.5 basis points. So considering this drop in Treasuries, the markets didn't do all that well. You would think the markets would be up more than half of 1%. If you've seen Treasuries come down big time like we've seen today. Now, the VIX also went down about 4%. That is good rather than not. The Russell 2000 went up 1.14%. So if your portfolios were a lot more in the green compared to what they have been recently, well, that's why. Your small and mid-cap stocks caught a strong bid today. And again, that's because Treasury yields have been falling. So that is good for the economy. It's good for the markets as of right now. Now, the economic data coming out tomorrow will be very important. It's going to be PPI month over month. Now, CPI is Consumer Price Index. Think of it like consumer price inflation. PPI is Producer Price Index. Think of it as Producer Price Inflation. If PPI comes in hot, you're going to have a problem. Now, last month, PPI came in at 0.7% month over month. You were expecting 0.3% for this month. So you're expecting a huge drop. Let's just be honest there. Now, why could this be a problem? If PPI comes in hotter than expectations, well, producers tend to pass on costs to consumers. So if that comes in hot, yeah, you're going to have more inflation fears. Core PPI is expected at 0.2% month over month. You've been right at about 0.2% for a while, so I think core is actually more important. If core does go higher, then you could actually see a bigger problem for the markets. And core PPI year over year expected to come in at 2.3%. Which this has fallen a lot from where it was. Last month was 2.2%, but you're basically at the Fed's target when you're looking at core PPI year over year. So not too much of a concern there. But tomorrow you're also going to get the FOMC minutes. Now the FOMC minutes, it's basically a transcript of what the Fed did at the last meeting. Now, with that being said, it's one of those situations where the markets are forward looking. So when you get backwards looking data on a Fed meeting we have already gotten, as long as there is nothing that is truly shocking there, the markets will react initially to it, but they will get over it very quickly. Okay, so I don't know if that's going to be the biggest catalyst, but it will cause a pretty big move at 2 p.m. Eastern Standard Time coming tomorrow. And then obviously on Thursday, you're going to have your CPI reports, and those are going to be really the biggest catalyst for this week. So go ahead and keep that in mind, guys. So there you have it. Now, AMC stock in particular, we went over this data in the last video. We'll give you a brief run through. Puts call ratio is hitting the lowest level today that it has been at in a very long time at 0.74. If you look at the short data here, you have a short score of 66, $225.74 million worth of short positions, estimated short interest of free float at 11.62%, free float out on loan at about 15%, shares out on loan 29.51 million, days to cover 1.8, cost to borrow 2.03, utilization of 58.7. So Nothing too crazy to speak about here, but AMC stock did close above $9.50 per share and held that into after hours as well. So that is very good. You're breaking above your longer term support line, connecting the lows that you have seen since back here in May of 2022. So now you're above that. That leads to a larger breakout from here. I would be very surprised if AMC stock fell from here, okay? Now, obviously, it depends what happens to the markets, things of that nature. But for all the reasons we stated in the last video, the risk reward does not look great being short in AMC stock right now when AMC could rally to $20, to $50 per share, or even higher than that, just depending on if shorts actually cover in 2024. At the same time, the business fundamentals are improving. There's just not a huge case to be short in AMC right now. That's just the honest truth. So I think that logic itself, the put to call ratio falling, the fact that we are now in a new fiscal year really gives a lot of credence for a much larger rally to come. Now the technicals are also confirming that. And right here with this line, that was at about $9.40 per share as well. That's important to point out. $10 per share is going to be a big psychological level. $12 per share is where you kind of fill this lower end gap, fill the gap that you've seen on September 6th. So if you get above that and start to run, then you're really looking good. And I don't even know if we'll stop at the 50-day moving average. You could go as, to the 100-day moving average at about $29.67 per share. I don't think that would be too crazy to see in the grand scheme of things. AMC stock is back at the same prices you were at during the lows of January of 2021. Obviously, split adjusted, price adjusted. You've really never been this bearish in a long time for AMC, and this was back at a time where almost everyone thought AMC was going to actually go bankrupt. So as long as we don't get dilution here, as long as we don't see a black swan event for the markets, I think AMC stock is going higher. And I think even right now, you're in the very early innings of a much larger rally to come. So if you wanted to go long in AMC, I still don't think right now is a bad time. I'm not a financial advisor. I'm not a financial planner. Don't trade based off of what I say. If you guys want to come get access to all of the trades that I make, so maybe you can get a better gauge of what I'm looking at, what might work, what might not work, link down below in the description of this video. But that's not financial advice either. I'm not a financial advisor. Again, you guys, it's important to come to your own conclusions and take risk management into every investment decision that you do make. Contact a financial advisor if you're confused or worried or don't know how to trade or invest in any of these asset classes that we are speaking about. But we would love to have you over there in the trading community if you guys would like to be a part of it. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.